Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there and welcome to Show Me the Crypto. My name's Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help deliver you with value. And on this episode, we're joined by Mati Greenspan, founder and CEO of Quantum Economics. Mati has been tracking market prices since the age of 13. That passion and deep understanding has given him a reputation as one of the top analysts in the cryptocurrency space. A co-author of the ebook, The Complete Guide to Fintech Trading and Investments, Mati was named number 97 on CoinTelegraph's top 100 most notable people in blockchain in 2021. His motto is, if not now, when? Mati, welcome to Show Me the Crypto.
Oh, thanks for having me, guys.
Yeah, really excited to have you on. And the first question, I came across a CoinDesk survey that you had filled out, and you were asked to explain how you got into crypto in one word, and you chose the word gift. So I'm wondering if you can expand on that, specifically like what the story behind it was and how that eventually led to you founding Quantum Economics.
Yeah, sure. I was working at eToro at the time, of course, 2013, and I'd never heard of crypto before, or obviously there was no crypto at that time; it was just Bitcoin. Yoni Asya, the founder and co-founder and CEO of eToro, sent out an email, saying, telling people about Bitcoin. And of course, I fell in love right away as somebody who, was firsthand witness of the 2008 financial crisis and the aftermath, and all of the Fed printing. And I'm going, wow, we can have our own money. This is so cool. And then about a week later, 2 weeks later, everybody who was interested was invited to a meeting about Bitcoin where we learned where it was. And Yoni said, okay, so whoever opens up a digital wallet, I'll give you one Bitcoin. It was worth like $30 back then. So that was it. It was a gift.
And so before we jump into Quantum Economics, I've heard you talk about this on a couple other interviews, and you have quite an interesting background and upbringing. First off, your grandfather was a self-made billionaire, which is incredibly interesting. And then another thing I mentioned in the bio, the fact that you've had your eyes on the market since an incredibly young age. So how did that upbringing impact your eventually growing into the career that you have now?
Yeah, man. Thanks for doing your research, Wade. That's really awesome. I feel like you might know a bit more about me than I do at this point. Well, I would say that it just helped along the way. I suppose my life has been kind of a chain of events, like I guess like everybody else, really. When I went into finance, I was looking for something to do on the internet and say, okay, like how do I make money? How do I make a lot of money? Because I was a musician before that. Let's say from the age of 19, 20, 21, I was going to music school, and I really wanted to be a musician. I mean, I'd done paper trading in the past, and always was interested in investments, and of course, the lessons that we learned around the table in my family, that those all certainly played a big part of who I am today. But once I met my wife, she was like, okay, you got to go get a job. So I started turning on Bloomberg television. I didn't understand a lick of it at first. I promise you, it was like 80% of what they were talking about in one ear, went right out the other. I'd fall asleep in front of the TV often. started reading, CNBC and Wall Street Journal and everything like that. And then I got a job in AvaFX in 2008, just at the tail end. So I was able to watch the whole financial crisis from inside of an online broker, and saw a lot of interesting things there. And I suppose it's been kind of one step after the other from then until eToro, and then of course the rest is history.
Can I ask what instruments were you playing, or was it more like music producing or?
Yeah, sure. So I played guitar probably from the age of 15 or so. But in music school, I learned a lot of stuff. I mean, it was 3 years of full-time music. So, orchestra, voice leading, counterpoint. I played a few wind instruments along the way as well. I hate piano. I couldn't do piano, but or keyboards or anything like that. But side flute and clarinet, vocals, and kind of stuff.
Cool. So moving on, after you did leave eToro and you started up Quantum Economics, what was the basis behind it? What was the mentality behind Quantum Economics? And can you explain to our listeners or viewers, what Quantum Economics is?
Sure. So, I mean, while I was at eToro, obviously, I'd seen and been exposed to a lot of different kinds of businesses and transactions and business models, of course, and had a lot of ideas about stuff that I might want to do someday. And one of the things that I did while I was in eToro early on, you remember when Tumblr was a thing? I don't know if you guys remember that age.
Oh yeah.
And I named my Tumblr page Quantum Economics, and just kind of everybody really liked that name. A lot of people gave me some good feedback. That should be a YouTube channel, or that should be a band, or like all kind of stuff. And so it seemed just like a perfect name, and really, it can be everything and everything that I've been wanting to do, and for a very long time. So we do we have a very wide range of financial services, of course, and that includes research and analysis, advisory services, and money management. So quite an eclectic, I guess, collection of things that we do.
When it comes to the research and analysis side, what kinds of things are you looking at when you're analyzing financial markets?
Yeah, sure. So we now have a team of about a dozen financial analysts, mostly within the crypto space, some of which are thought leaders in their own right. You can see on our About Us page, our VP of content, Charles Beauvert, he's written 400 articles for Forbes already, and he's a senior contributor there. And Luke Kerner is the CEO of Big Token, which is basically like a project for monetizing your own data and taking back control from the big guns. But he's also, obviously an angel investor for many years. Ethan Pierce, Rachel Wolfson. I mean, you might know some of these people, and I personally feel quite honored, to be working with them, and and each member of my team, of course, has a very specific focus. Can be within traditional markets, of course, but also within the blockchain space. So we have a dedicated analyst for DeFi, a dedicated analyst for Bitcoin, stable coins, CBDCs, and any other niche market you can think of within crypto. We have somebody who is an expert within that area.
And what's the typical type of customer for you? Like, who comes and actually utilizes your services?
Yeah, that's a really good question. So as far as research and analysis is generally going to be, let's say, a broker or an exchange, or any kind of startup project, that generally speaking, they're looking to increase their reach, or increase the market's knowledge on a specific subject. So we have the option either for them to do kind of ghostwritten, which we do a lot of, where basically they come to us, they give us, they'll either give us some of their own data that they want us to highlight, and we supplement that with research from our own side, and then it gets published out in their name completely. Or we can do kind of co-branded stuff where it has quantum economics stamped on it. And of course, we have a lot of followers across social media right now. Just on Twitter and LinkedIn alone, we have 250,000 followers.
Wow.
And we've been mentioned in the news 1,500 times since the start of the year.
Wow. Congratulations.
And speaking of
Thanks.
the fact that, it's been mentioned so many times, I think that's what happens. I mean, we're clearly seemingly in a bull run right now, a bull cycle, and that brings about, the price news brings about a lot of attention and interest into the space. What is your message to somebody who's maybe just hearing more and more and getting more interested about crypto because of all of these headlines and this type of thing, and now they're jumping in, FOMOing in, maybe expecting to 10x or 100x? What's your message to those people?
Yeah, so we do get a lot of those, and it's not just right off the internet. As we progress throughout the bull cycles, there's always going to be also friends of friends or family members, and and we get a lot of both, I suppose. It's very difficult to generalize because everybody's really different. I mean, that's one of the challenges, I suppose, of social media. And right in my handle on Twitter, it says tweets are not financial advice, and the reason for that, because I do have a trader's license and I am authorized to give people financial advice, but I cannot do that on a one-to-many platform, right? I can give you financial advice only once I understand who you are, where you're coming from, what are your goals, what do you want to do with your money, where's your other, what does your overall portfolio look like, what is your appetite for risk. Once we have that conversation, then I can say, okay, well, you might want to diversify with this and this asset class or something like that, and that can be helpful for you. But when you get people on Twitter, like with a tweet, I don't know, and I frequently get people, okay, so tell me which coin I should buy. I don't know, man. Come on, which coin is gonna moon tomorrow? I don't know. What I do know is that the projects that I'm involved in, I really am in a unique position where I get to choose which companies I work with and which blockchain projects I support. And I can proudly say that all of them are doing extremely well. I think that this recent bull run has been a blessing in so many ways that I couldn't even begin to count. So to answer your question, I suppose it's going to be very individual depending on who's asking and what the context is.
You mentioned that you get to choose those blockchain projects that you choose to work with and be involved with. What are some of those projects? Is that public knowledge, or is that something you're able to share?
A few of them are public knowledge. So 4 of them specifically. The first one that I signed on as an advisor to is Lunar Crush, which is lunarcrush.com. And I don't know if you're familiar with what they do. It's really fun stuff. So you can check out their website, and they basically do social listening for crypto is what they call it. But the way I see it is measuring the network value of cryptocurrency. So they got all of the cryptos listed, and then they've got different kind of categories for social volume, and they rank them based on their own proprietary metrics. And they have some really cool visualizations, graphs, and stuff that you can play around with and compare and contrast different cryptocurrencies. And they're listening to everything. So that includes, Twitter and Reddit, Medium, and also, the media and everything like that. It's interesting because, cryptos don't have any kind of traditional ways of measuring the value of them. So really, one way that I believe in the future will be much more prominent is the size of the network, and this is really how we measure it.
So is that like social sentiment data that's being displayed through a platform by way of dashboards that you can utilize on the platform?
Exactly. Yeah. I mean, it's lunarcrush.com, and you can, and they've just added now a feature that I personally had the pleasure of assisting them with, which is kind of an alert system, which will give you, either an SMS or a Telegram message or an email, however you choose. Once the social volume, for example, spikes, or you can really personalize it. It's quite interesting because I was the first one. It was the first advisory that I took, and now I have the pleasure of actually investing in them, which it's quite a turnaround, because they're just, like, as far as I see, they're knocking it out of the park, and they keep, their website just keeps their traffic just keeps blowing up. So definitely worthwhile. The second one that I signed on as an advisor to is Chili's, and I'm sure you've heard. I see you guys nodding. Yeah. Everybody knows Chili's. I mean, it's just like it's completely exploded, and I think that it only has room to grow from here. Obviously, I mean, it's their target audience is sports fans, and that's probably one of the biggest demographics you can think of, other than gender, right? Yeah. Billions of people across the world consider themselves sports fans, and they started in the biggest sport, obviously football, in the European Union, and right away partnering with some of the biggest teams there, and now they've just made an investment of $50 million to go into the United States. So, it just, as far as I see, it's just an amazing project, and they have the right idea. They have the right team. They have the right tokenomics, and everything kind of fits in place. And the third one is Electroneum, which is basically a project for financial inclusion within developing economies. They have a platform called AnyTask, which is basically like a Fiverr for crypto. And it's really geared towards letting people who are they don't really have access, even they might not have a laptop in many cases. All they have is their smartphone, and letting them create stuff and sell it online for for pennies on the dollar, where you're gonna get basically the same quality, but much cheaper. Let's say you can get it for like $2 or something like that. And they're growing very quickly as well. And the more they grow their platform, they're basically paying their creators in their Electroneum token. So the more they grow their platform, the more there's built-in usage of the currency itself. So that's very exciting, and I think also over the next few years can turn into something extremely, extremely large. And number 4 is Luno, which is a hot wallet for crypto. It's actually one of Barry Silver's projects. And it was actually recommended to me by our Bitcoin analyst, Jason Dean, who's one of the number 1 Bitcoin analysts in the world. In my humble opinion, he's a top writer for crypto on Medium, and he has his own mining operation. So he's really kind of, and he's been on CNBC and Bloomberg, and quite frequently appears in the news there as well. So he's been working with them for quite a while now, and as soon as he recommended to me, for me, it was like his recommendation was good as gold. And I looked into him, and I started speaking with the team there, and it seemed to click. So basically, this is our, for anybody who's new and says, okay, which wallet should I use? We definitely send them to luno.com, and we'll give them a coupon code, which is QE for everyone, and you get some free sats.
Ulf, do you realize that our audience has either been watching or listening to this episode for 20 minutes?
20 minutes? They should probably subscribe.
Yeah, they should subscribe, and they should like and comment and hit that notifications bell.
Oh, and did you tell them about the NFTs?
That's right. We have our own NFT for our OG supporters. This is a way you can support our show, help us bring you continual great content. Information on that is below. So I'm wondering what your thoughts are on, just since you've been interested in the space since 2013, or since you've been knowledgeable about it, and how you've seen it. But there's this theory that some people have behind this 4-year cyclical thing that's revolving around the Bitcoin halving event. I mean, what you're doing, I'm sure, is different, but do you have any opinions on whether that might play out that way, or is that something you're even looking at?
It certainly is interesting. And we recently did a research piece for a client, which was a ghostwritten piece. I don't want to give away too much of the details, as their proprietary knowledge now. But it is interesting, right? And the pattern has repeated itself almost exactly, right? Now, what is it? We're on the third time. So all we can say is if history repeats itself, right? But that is a big if. And as somebody who comes from a background in traditional financial markets, there's a disclaimer that the regulators make you say whenever you use a chart, which is past performance does not indicate future results. And that very much applies here. Right? It's basically, we know what happened in the past, but we don't know what's going to happen in the future. So let's say if history repeats itself for the fourth time, then Bitcoin is very likely to be around $400,000, within the next 5 years. It's an interesting statement, but obviously it's not something that we can really count on 100%. But if we look at everything else, I mean, it makes sense that anybody who lives in the digital age should have an exposure to Bitcoin. And of course, that's also going to be very personal, depending on if you live in a country like Venezuela or Turkey, which has hyperinflation, or if you're managing $1 billion portfolio, you're going to want a different level of exposure to Bitcoin, right? So sure, there's different strokes for different folks, I would say.
In that regard, let's say you're someone who wants to invest in crypto. Maybe you are new to crypto, but you're not getting in because of the crazy potential, because of the crazy volatility. You don't want to jump in and expect 100x gains. You want to jump in and you want to reduce your risk as much as possible, but you still want to make some gains, but maybe smaller gains more consistently. Would you have advice for, obviously very high level we're speaking here, but some sort of strategy on how someone could reduce the volatility and still enter the world of crypto and potentially make some decent gains on a slower, more steady path?
Oh yeah, definitely. So, and obviously without this being considered financial advice, the number one thing that you can do to reduce the risk in your portfolio is to diversify. It's mathematically proven, and it's been deployed by portfolio managers around the world for decades, if not centuries. The more you diversify, the more you maintain the upside potential while limiting the downside risk. It's a very simple formula. Obviously, that works better when you're utilizing different asset classes rather than just, because sometimes I tell people, yeah, you should diversify. They're like, I'm holding 20 different cryptos. That's not exactly what I mean here. Yes, that does help. Being exposed to 20 different cryptos is going to be, depending on which ones, obviously, much more safe than holding on to one, because when you hold on to one, you have that kind of 50-50 shot. It goes up or it goes down, right? And you're going to either have a happy day or a sad day every day, right? But when you're holding on to 20, then the losers, the winners tend to make up for the gainers, right? Obviously, the crypto market itself is very correlated unto itself, so that doesn't always work out. And obviously, if you're using the more established cryptocurrencies, right, the ones that are in the top, say 10, 20 by market cap, those are generally going to be a lot more stable. Whereas if you're getting the ones that go, oh, you can only get that one on Uniswap, and then you go, well, that's going to be a bit more risky. Obviously, there's a lot more upside potential because, it hasn't been listed on Binance yet. I mean, it has, if it does get listed and the project gains traction, I mean, you can see thousands of percentage points, like we've seen in many different projects very recently. But again, it's going to depend on who you are. But I would say also for most investors who are using more than dabble money, you are going to want exposure to different asset classes as well. And that means stocks and ETFs and indexes, currencies, commodities, and all of those fun things as well.
Earlier in our conversation, you talked about in 2008 kind of having an insider's look at what was happening with the financial crisis. And especially in the last year and a half, with the amount of money that's been printed, for our audience who maybe isn't aware that this could be potentially a big issue, do you mind just explaining that, like the basics of what you've experienced and also what you think the result of all of this is going to be?
Yeah, definitely, Wade. I mean, this is really a large focus of quantum economics. It's going to be on our About Us pages, basically. We are very dedicated to understanding and teaching about the central banks, what they are, what they do, and how it's affecting things on the ground. It's also a very large focus of my personal writing, which I'm writing a daily newsletter, which is read by, I don't want to go too deep into that, but let's suffice it to say, by all of the top tier financial media. So it would be difficult to explain kind of in a nutshell. But what we can say is that I am critical in many ways, as I believe everybody within the crypto market and just about everybody who identifies as a libertarian can be very critical of the Fed's actions. But it's also very prudent for us to understand where they're coming from. And my VP of content started a discussion in our team group just today about this. Wait a second, you're criticizing, because I wrote about it on Friday and I gave it to them. I handed it. I was like, and I didn't stop short of calling them clowns. And he's like, well, but what would you do differently, right? And it's something that I've put some thought into before, but I would say that you can't really come to any answers because, well, first of all politicians, think short term, and because it's easy to pile on a mountain of debt when you're not going to be there by the time that debt is called back. So that's one thing. But on the other hand, I mean, imagine you're Jay Powell himself, right? And on the one hand, you have the option to push the button or to not push the button, right? So pushing the button, we all know, makes the stock market go up. And that makes people pretty happy, right? On the other hand, if you don't push the button, the stock market could fall. And you're going to get blamed for that, right? So somebody with, an inkling of self-preservation, right, who doesn't want the powers that be to throw him out, is going to push the button almost every time. And so it's very difficult to say, have I been in that position with that enormous amount of pressure? Would I push the button or not push the button, right? And I can say right now, yeah, I would cause austerity, and I would try to do what's best for the economy, and at least not put in so much stimulus and let the free markets take care of themselves. But honestly, I have no idea what I would be in that position. And obviously there's a path to that position, which kind of also shapes your thinking around these things and gives credence and justification to those type of actions, stuff that I'm very thankful that I've not been exposed to too much.
Kind of points out maybe many of the things that are wrong with the system and the way that it's currently built. The fact that someone who has that power also has all those pressures on them. I mean, what do you expect kind of in that type of scenario?
You're absolutely right, Wolf. I think that it would be interesting to design a kind of algorithm that gets to decide to push the button or not push the button, because the algorithm doesn't have any of those pressures. He doesn't care about job security. But I suppose that could be also portrayed on the system at large. I mean, especially as we know in the United States with the two-party system, it's kind of the illusion of choice, and I don't think that Donald Trump was any really different in any way, really different from Joe Biden. I mean, at their core, they're both going to try and do the same things, even if they don't try to do it in the same way or specifically support different political agendas. They both have much more in common than they do opposite of in common.
Yeah. So I guess going further down that then, whether or not, you or I would make the decision to push the button and that kind of thing, I mean, what do you see as being the result of this? I mean, inflation, how is this, do you think, going to affect the value of the US dollar?
Well, short answer, we don't know. In 2009, when quantitative easing was first deployed, there was mass panic among economists. That panic never really proliferated to the lower economy because people didn't they had bigger problems to deal with at the time. People were pretty upset about the bailout and how the bankers never got in trouble for what they did, but it didn't really go much further than that. The economists, on the other hand, they didn't really care about the bailouts. Actually, they were worried about inflation. It says, where you're just printing all of this money, you're just introducing more and more money, and they were quite certain that hyperinflation, was around the corner, and that was in 2009, and it went all the way till 2011. And of course, the number one trade at the time was gold. Everybody wanted gold, and gold just basically went up and up and up that entire period. It was like 3 years, but it just did not stop going up. Like a few minor pullbacks here and there, but nothing that resembled, kind of a breakout from the bull market. Then around 2013, people looked around and they're like, well, they've printed all this money. I don't see any inflation. Do you? In fact, there was deflation. And for many years, nobody really understood why. Nowadays, there are theories, but I still think that this is considered to be one of the biggest puzzles, economic puzzles in history, is why they keep printing more and more money. And actually, the periods of 2015, 16, 17, these were largely deflationary periods, where actually the value of money not only held its value, but actually went slightly up, which then the Fed stepped in and they said, okay, wait a second, we should be printing more because we don't want deflation. And then they started to see themselves as this like superhero fighting deflationary forces. The price of gold crashed in 2013 because they're like, there isn't inflation and they should just keep the printing presses running. And then the economists started, as they do, just as the weatherman, when the weather turns, they change their tune as well. So there are a lot of differences between now and then, no doubt, not least of which is the amount of money that's been printed, which is just completely ridiculous. The other thing is that we're learning more about the economy now. And it's no longer seen or being seen in this kind of binary inflation or deflation, right? Actually, and this is what I wrote about on Friday, was that everybody was at the beginning of the pandemic, right? And the pandemic just changed everything. First of all, the wealth gap got blown wide open. Actually, the amount that was transferred into the pockets of the rich is almost identical to the amount that the poor had lost during the pandemic, which is a shame in many ways, and very sad. Obviously, economists at the beginning were arguing if it was going, what shape the recovery would take, right? Would it be a U shape, right? It goes down and then back up. Would it be an L shape, right? Down and then like a very long, drawn out. Would it be a W shape, false recovery, back down and then eventually up? And most of the economists kind of settled on this Nike swoosh, right? Which is like down and then, and which is actually what happened in the stock market. But if we look at what's happening in the real economy, which is not necessarily reflected in the stock market, the shape is actually a K, right? It's going in two separate directions at once, right? Where the rich are getting richer, the poor are getting poorer. But even inflation is K-shaped, right? Where the prices of food and energy, for example, are going up, but the price of technology and things like that are going down, right? And I think that certainly we're just seeing things differently than we used to. And before it was more binary, and now it's a lot more multifaceted when we try to look at the bigger picture of how things are shaping up. I don't think any of it's good, obviously. If you happen to be on the top half of the K, you consider yourself blessed. But for those who are on the bottom half, I think life is very difficult at the moment.
Do you see any solution for fixing that issue?
Wow. Again, thankfully, I'm not in the position where I have to make that call, but it is something that, again, I've been dedicating a lot of thought to these last few days, and most likely that'll turn up in the newsletter sometime this week.
I want to switch gears, Mati, and I want to address a tweet that you have pinned right now. So this tweet's from April 4th, and you chose to pin it, and the tweet is, Ethereum is quickly becoming the preferred currency of the World Wide Web. So it's interesting because we've had a few guests who are like, ETH maximalists, I guess you could call them. Like they're all in ETH. We actually had Charles Hoskinson on an episode, founder of Cardano. We've had some other ETH killer supporters, I guess you could say, if you want to word it that way. But question for you, it's two-part. First off, what made you write that tweet, and why did you choose to pin that tweet?
Yeah, so that's a two-parter there. What made me write it was actually an article, and I was going to put the article in the tweet, but I decided not to at the end because it didn't really have anything to do with the article. But the article was about a girl who had 15 minutes of fame like 4 or 5 years ago as she did a music video called like The Clingy Girlfriend or something like that. She was like put like words of a stalker or something like that, and it blew up and she went viral, and she had this very viral lifestyle, kind of reliving those 15 minutes of fame since then. And now she's kind of sold her moment of fame as an NFT. And she sold it for, I don't remember the amount off the top of my head. I believe it was about $500,000.
Wow.
In Ethereum, right? That innovation of the NFTs, which has now gone viral, which is touching so many aspects from art to sports to, baseball cards and everything like that. All of that's being built on Ethereum. And the previous hotspot of crypto, which is very much still alive, is DeFi, right? Decentralized finance. And that's all being built on top of Ethereum. And when we start to think about the World Wide Web 3.0, right? It's all on Ethereum. I mean, obviously, Bitcoin has a one-up on Ethereum as far as being a storehold of wealth because of its digital scarcity, right? And because of its brand recognition. It's much more liquid if you're trying to get a payment through across the world. Not everybody knows how to deal with Ethereum, and it's much easier to transact in Bitcoin for the purposes of international trade and whatnot, which is, I can't explain to you how many times I've tried to send money through the traditional system and it just wouldn't go through for whatever reason. And then all of a sudden you just say, okay, fine, just give me your Bitcoin address, right? And you know that the transaction happens within 10 or 20 minutes, it's done. Usually a lot less than that, sometimes a bit more, but you don't care, right? Because you're banging your head against the wall for a week or two, right? And then Bitcoin and it's done. Now, so I tweeted that out, and here comes the second part, right? And I noticed there was an overweight of engagement on it, where on the one hand, almost every reply on the tweet was, no, it's not. No, it's not. And those are the Ethereum killers. But on the other hand, there was a lot of likes and retweets, right? Like, you have to think, I mean, Charles Hoskinson included, there's so many people out there that are trying to pump their own bags, right? And yeah, Ethereum can be slow sometimes, and sometimes it can be expensive. But that's because people are using it, right? You can't don't ever forget that. Cardano, they can say that they're scalable, but until they see the level of traffic that Ethereum is seeing, we don't know whether the fees will spike. And the same goes for Binance Chain and whatever other quote unquote Ethereum killer is out there. So, I mean, that NFT sale and all of the NFT sales have been in Ethereum. When you go onto those markets, when we think about the building of the World Wide Web, it's all happening right now on Ethereum. Whether or not some other cryptocurrency might come out and change that, it might, but that's not what I was talking about. I wasn't talking about 5 years into the future when Cardano might finally be ready for use. I'm talking about right now, as it stands, Ethereum is very quickly becoming the cryptocurrency of the World Wide Web.
How do you feel about maybe the analogy that some people would make around the fact that they might compare, they say, okay, because for example, Ethereum supporters, and for the record, I'm an Ethereum supporter, but I'm also a supporter of these other projects. I think, why does it got to be a one-sum game? There can be multiple projects that can all take off, but never mind that. The point I'm making is for Ethereum supporters specifically, who believe that it's kind of like the one project that really matters. They might make the argument that you just made, that Ethereum is the one being used today. It's the one with all the development. It's the one with people actually utilizing the platform. And then sort of the counter argument from these other platforms that aren't actually there today is they say, oh yeah, well, what about the Yahoos and the Bings and, these, search engines as an example? They come and then they go, and they're king for a while, and then a new king arrives on the scene. Or you could use browsers as an analogy, or whatever you want. And is that a fair analogy, or is that completely different in this when we're talking about crypto?
It is a fair analogy, but what I would, and again, I'm not an Ethereum maximalist or anything like that, right? I mean, I've obviously, just from who I am and the projects that I'm involved in, I hope that you can get a picture of that. I mean, I'm just kind of commenting on what's happening under our noses, but I think that it is correct, and there is a possibility, right, that another cryptocurrency protocol or other way of transferring value peer-to-peer over the World Wide Web will emerge as a dominant player later on. It's quite possible, and but what I would also say is that it's far more likely for a dominant player to consolidate power than it is for an outsider to come and grab that market share, right? Like, imagine another search engine trying to overtake Google at the moment, or another online vendor trying to overtake Amazon. I mean, it's just so large, right? And that's the way I see Ethereum at the moment. And yes, it's possible that others, and especially with the power of interoperability, where you can just make things that are also connected to Ethereum, but not necessarily dependent on it, and then people can kind of wean their dependence off. Yeah, it's possible. But as an investor, you want to position your portfolio with the dominant player out front, and then have the side bets, right? And then have those ones that, okay, maybe if that one comes out and gains in market share, it has a bigger upside, and you want to have those in your portfolio, but on a much smaller level.
Hey man, I'm wearing an Ethereum shirt right now, so I'm on board with what you're saying for sure.
Nice.
It's funny,
nice.
Actually, the example you gave, another one, there was that, what's his username's like Dogface or something like that, but he had the TikTok video, longboarding or skateboarding down, drinking the cranberry juice, listening to Dreams by Fleetwood Mac, and it was like, again, just a viral moment. And I think he's flipping that into an NFT with a minimum bid price of 300,000 or 500,000. Apologies if I'm getting that wrong. So I think it's an interesting point you make on that for sure. Mati, this has been an awesome interview, just so much value packed into it. We like to end all of our conversations with a little 3-question segment that we ask the same 3 questions to each guest, and we call that You Had Me at Crypto. So Alf's going to ask you those questions.
Nice.
All right, Mati. Who's your favorite person to follow in the crypto space?
Oh, geez. I don't know, man. How Finney. I don't know. What am I going to say?
There's no wrong answer.
I think documenting Bitcoin has been doing a good job. It's a relatively new one, but he's got a very large following because some good content, very good, solid content.
Is that on Twitter?
On Twitter, yeah, of course. Where
Documenting else? Bitcoin? Yeah, fair enough.
Yeah, where else exactly?
Hey, you never know. I digest a lot of video content.
No, steam it.
Okay, question 2. What will the price of Bitcoin be 10 years from now?
Probably, and I say this with a 99% certainty, between $100 and $1 million.
That's interesting, actually.
We've had similar answers where we've had like 0 or $1 million, basically, because some people are like, well, it's either going to crash and burn or it's skyrocketing.
But what I find interesting there, so our most popular answer is 1 million, which obviously people are saying it's going to be around that. But your answer is baking in the fact that you don't think it will be over 1 million in 10 years.
Well, over 10 years, I suppose it has a possibility. And that question, I think, really has more to do with the U.S. dollar's value than it does with Bitcoins, right? If the U.S. dollar completely hyperinflates, I mean, it could be billions, honestly.
Yeah.
Good point.
All right. Question 3. What is the most underrated coin or project in crypto?
Come again?
What is the most underrated coin or project in crypto?
Oh boy, underrated. I'm gonna go with I'm gonna go with one of the ones that I'm advising, which is Electroneum, and I think that they deserve a lot more credit than they're getting. I think that I think a few people came out against them in the very beginning, and that kind of hurt them. But I think that they're doing a great service to people who need it a lot.
Is this okay? I'm going off my memory, and I'm not 100% sure. But is Electroneum the one? Was it a wallet originally, or did it come out with a wallet and you could earn Electroneum if you had the wallet, and it was like a mobile app?
That's right. Yeah. Mobile mining.
Right.
And I mean, they had to kind of shut it down because there was people farming. Obviously, I mean, I'm sure you've seen like videos of like people with a wall of 100 mobile phones and stuff like that. And a lot of the time, what they're doing is they're kind of looking for things like that. Obviously, no spoilers, but they're working on a few things that might be very interesting along those lines as well.
Cool.
Awesome. Good stuff. Mati, this has been an absolute privilege having you on the show. Thank you so much for joining us on this episode of Show Me the Crypto.
Thanks a lot, guys. We'll see you soon.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.